Thank you, everyone, and welcome back to another episode of By the Numbers. All right, we're going to go over something that's going to increase your cash flow. Oh, yes, enhance your credit and eliminate rapidly those bad debts that you do not want. Now, we've got a massive problem right here, but we're going to break it down into bite-sized pieces so that you can go out and increase that cash flow, enhance that credit, and eliminate those bad loans so that you can build that wealth. Are you ready? Man, I know I am. Listen, before we get into this, go ahead and like, share, and subscribe. I'm telling you, do it right now so that everyone around the world can know that Velocity Banking is going to save the economy. Are you ready? All right, let's get into it right now. So this example is one of the greatest examples that I've ever seen of someone who is not afraid to invest in themselves, to get what they want in order to build the life that they want and desire. So what we want to do is actually admire, right, this person. I mean, you've seen it on the commercials. They try to shame people into thinking that, oh, this person, they couldn't help but to spend money and this, that, and the other. Listen, that's not necessarily the case. Look at this brave individual. Huh? Look at this. We got $4,277 all the way down to $593. We even have $525. Look at all these beautiful numbers. All right. So what does this mean to us? Okay, now these represent loans, all right? Some of them are lines, okay? Look, what this means is the greater the giant, write this in the comments below, the harder they fall. The greater the problem, the greater the challenge, the harder it falls. Now, this individual actually is entered into a debt consolidation program, okay? And for some that works, for others it doesn't. But I just want to show you by the numbers what you would do. And the numbers are actually going to tell you what was the best route for this person, brave person, to take, okay? So as you can see, we have the numbers stacked up here. We really do. Now, I was not given the minimum payments on any of these numbers, and that's okay. Because all that matters, watch this, is which one are we going to pay off first? Which one? How do we determine that? Well, we determine that by this. There's a little known formula called the cash flow index formula. Okay, we're going to go ahead and call it CFI for short. And we're going to show you the power of the cash flow index formula, okay? You're going to take your loan balance, LB, and you're going to divide it, okay? You're going to divide it by the minimum monthly payment. We're just going to go ahead and call that MP, all right? And when you divide the loan balance by that minimum monthly payment, what you're going to come up with is the cash flow index number. Now, the number that is closest to zero, okay? That's the one you pay off first. So let's say that the $4,277 had a minimum monthly payment of $40, right? And then 3103.49 had a minimum monthly payment of, like, say, $200, all right? Well, which is the one you're gonna pay off first? Which one is gonna be closer to zero? When you take the loan balance, 3103.49, and divide it by 200, okay, minimum monthly payment, it's going to be closer to zero, folks. Okay, that's all we want to know. And because it's closer to zero, that's the one we start paying off first. But how do we pay it off? We pay it off with our $1,500, okay, watch this, $1,500 credit card. Isn't that beautiful? Huh? $1,500 doesn't have to be a credit card, $1,500 credit line, right? Called a balance transfer. Have you ever heard of that? Absolutely. You can transfer balances, you sure can. So what you're going to do is you're going to take that card and you're going to say, you know what? Let's go ahead and take this amount, the $1,500, and place it towards this principal. And then we're going to continue that monthly payment. Why? Because your cash flow is 800, okay? let's put some designations there. This is the credit card, all right? And this is the cash flow. Now, where is that cash flow sitting as you're paying off all of these other payments with minimum monthly payments? Where's the cash flow going to be sitting? It's going to be sitting in that card that you have designated, right? Listen, you've got it in your crosshairs, okay? This is the one. You're putting that over this. So I'm going to just put 3103.49. We got them in the crosshairs, huh? That is the one we're going to be focusing on, okay? We're going to absolutely eliminate it. That's what we mean by elimination. Eliminating. Because once that $200 is freed up, and that's why we use the cash flow index to show us what is the most amount of money that we can free up quickly. We're doing it right here, okay? Crosshairs, eliminating it. You understand? So when we eliminate this, what happens to the $200 a month? Do we spend it on something else? Do we go out and get another bad debt? No. We're going to place that towards our education. We're going to place that towards our children's education. We're going to place that towards our community's education. We're going to place that towards our wealth building. Okay? Whatever it is, we're going to make sure that that money comes back to us. That's why we use the cash flow index method. That's why we utilize velocity banking, so that all of these numbers, and you got them all, don't you? You have them all, and you're asking someone for help when you know that the help is right here. Look, you go through and you calculate. Okay, well, let's put this in the LB, the loan balance. All right, let's say divided by what? What's the minimum monthly payment for this? $40, $50, $60, $100. Put it right there, and then if you want, I can do it for you. Just let me know, okay? And then what you'll do is you'll prioritize them, and you'll head up, you'll chunk, okay, the principal of the balance that has the cash flow index number of closer to zero, right? Whether it's 30, 20, 10, or it may be 1, right? You hit that one up first, and that's the one you're aiming at. That's the one you put this credit card to, all right? Principal, and then monthly payments. You get your income, guess where that income is going? Inside your credit line, so that credit line can attack, okay? And that's how you get rid of your bad debts. You eliminate them. That's how you increase your cash flow, because when you're done with that one, the cash flow goes here, folks. And now you've got $1,079, huh? And then what happens in 6 months? What are they going to say? They're going to say, well, you know what? You've been such a great steward of your finances. You paid that one off. Your credit utilization is going down. Let's go ahead and elevate your credit limit. So at the same time, this can happen, all right? Your cash flow is increasing, and so is your credit line. And you're saying, my goodness, what happened? You were in the hole. You were in the hole. What happened? Well, I was in the hole for 3 days and 3 nights, but I came up out of that joker. Huh? Listen, folks, that can happen, okay? Increase your cash flow, eliminate your bad debt, and enhance your credit all at once with By the Numbers. Look. I showed you by the numbers. This is what you do. Do it yourself, right? I know you have all of these things going on, but only one thing is necessary. Put this number right here inside of this. So we have $9,000, right? $98, and divided by that minimum monthly payment of $376, and it will show you which loan to pay off first. You don't need anyone to help you to pay off your loans. You already have the calculation. The power is already in your hands. Now, if you haven't already consolidated the debt, that's great, okay? Now we know how to pay the debt. Do we understand? Now we know how to pay it. Perhaps you can get a line of credit that is equal to, watch this, that is equal to what you have to pay off. Did you know that paying off lines of credit is better than paying off loans in many instances. Okay? So look, this is what you do, all right? And you don't even have to starve yourself or go on the beans and rice diet, okay? Or live off a pemmican for 3 months in order to get all of your finances in order, okay? You take it one step at a time. You use that credit card and you say, well, CJ, I don't have a credit card. Well, then you use your checking account or you use your savings account or even your retirement account to place that inside of the principal. And instead of paying them 20% a year, pay yourself 20% a year. It can be done, and you are going to do it. Don't just know the velocity banking method, live it. All right, folks, if you have any questions, I am here. All right, cindyfox.com/VelocityC. Sign up and get hooked up. God bless you, and you take care.